Guys, welcome back to the channel. Keith at Crypto Bullseye. Now, this video is one video that I want as many people to see as possible because I'm annoyed enough to do this video that I'm sick of crypto influencers saying time and time again that if you're not a perma bull, you're not going to make it during the next crypto bull run. And what they'll do is they'll make you like the black sheep. They'll push you out of the community. They don't want to hear anything bearish. They only want to hear bullish news. It's going to go up. It's going to go up. It's going to go up. You need to hold your bags for 2 years. You need to hold your bags for 3 years. You need to hold your bags for 4 years. Absolute bull crap, guys. We are trying to play the next cycle during the course of the next bull run, and there's a limited amount of time for that. We're not trying to play the next bull run 4 years' time, trying to play this bull run. So what I'm planning on doing is scaling out and scaling out. I've built during the build phase. The build phase is nearly over, and I'm going to be scaling out during the course of the bull run. And that's going to mean one thing. I'm not going to get the maximum amount of gains during the course of the next alt season, but it's going to mean another thing that I am going to potentially, if I play it right, make life-changing gains. Trying to pick the tops, guys, is trying to win the lottery. Trying to pick the bottoms is trying to win the lottery, guys. It's a massive gamble. So it's a course of use and risk management and scaling out during the course of the bull run, the same as you scaled out during the accumulation phase. Remember, guys, accumulation phase, markup phase, distribution phase. Don't want to be buying during the distribution phase. You want to be selling during the distribution phase. And what does that mean, guys? If you sell something, you're a bear. So anyone that says that you need to be a perma-bull and ride the markets all the way to the top and then all the way to the back down, I'll tell you one thing, guys. When they're at the top during the distribution phase, they are selling, they're maximizing the gains, and you are riding the market right back down. And it annoys me, guys. And what we're going to do is go through, sorry for that rant, we're going to go through a previous market from a previous cycle, a previous asset from a previous cycle, show you exactly what happens if you're a perma-bull. So before we get into all this, let me talk a little bit about me, guys. So I've been in financial services for the last 20 years. I understand cycles. And over the past 4 years, I've educated myself compulsively within the crypto space. That goes from all angles within the crypto space, outside of crypto, traditional markets, how bonds work, how treasuries work, how the flow of money goes from one asset into another asset. And more importantly, the one thing that I've learned that annoys me, the more that I do understand the markets, the more that I do understand the way that the world works, the way that I do understand macroeconomics is one thing that's happening, guys. The middle class are slowly getting wiped out. And that's the one bad thing about capitalism. It's good to own things, but the rich are getting richer, unfortunately. The poor are getting poorer. And the flow of money, which is the new money that comes into the economy that's been printed, goes into one hands, guys. It goes into the middle class initially, then out of the middle class to the rich. The middle class are the people that own the homes. The middle class that are people that own assets. Those assets are usually bought by borrowed money, and that borrowed money allocates interest, and that interest goes to the rich, guys. The rich are in the pockets, or the government are in the pockets of the rich now. Western nations are going bankrupt. They've printed so much money. And when they're printing money, guys, they don't just print money and put it into circulation. It doesn't work like that. They issue bonds. Those bonds are bought up by people. Those bonds are bought up by the rich. That means that the government are in the pocket of the rich. And that means that the rich can determine what rules, what regulations can go in force. That's why the rich don't pay any tax. And completely off track again, guys. That's another thing that you'll learn about me. I've got attention deficit disorder. I've got obsessive compulsive disorder. And this video was about what happens if you're going to be a perma-bull. And again, I've completely gone off kilt. So let's get back to what we were talking about. So the market cycles, we've got a 4-year market cycle. Remember that, 4-year market cycle. You hold your bags for 4 years. You're going to be where you were when you started. You're going to miss all of the bull run, and then you're going to be at the start of the new bull run. And then if you hold again for another 4 years, you do exactly the same thing. So it's all about understanding market cycles, taking advantage of the market cycles. And we'll go through the Wall Street cheat sheet again. Been going through this a lot recently on the channel, but it works. So the different emotions during the cycle, and you've got to remember that different things happen during different times of the cycle that's going to make you feel like this. And you've got to think of P&L, guys. If you're in something and you've got $1,000 in something and that $1,000 goes to $10,000, you're going to start feeling these optimistic emotions that the rally is real. You're going to feel the thrill. You're going to buy more. You're going to tell everybody to buy. And then you get to euphoria. I'm a genius. If everybody tells you to hold at this point and you're not going to be a bear at this point, because you'd be the only bear within 100 people, 1,000 people, 10,000 people, and you'd be called the black sheep. So what, guys? So what? It means you're selling at the top, guys. If you're a perma bull, if you're a perma bull, it means you're not going to sell, because if you sell, you're a bear. So every bull has to be a bear. Every bear has to be a bull. Otherwise, they're just going to ride the markets up and down, up and down, up and down. So then you go through the complacency, and this is where the lower high gets put in, and people think that a higher high is going to follow. People are buying this dip and buying this dip after euphoria, and they think that their capital is just going to go to the moon. You get the lower high, and then you've got anxiety, you've got denial, you've got panic, capitulation. During these times, guys, things that are happening, when you've got optimism, you've got belief, you've got thrill, you've got new projects that are being launched that have got real utility, you've got other projects that are being launched that have got no utility but they've got a strong community, you've got all sorts of good news, positive news going on. Everything is going to be adopted. The markets, the news, everybody's talking about it when we get to this point here, and this is where everybody wants to buy, and that's why you get a blow off top. You get a blow off top because everybody wants to buy, everybody wants to buy. But at that point, guys, market's built of lots of things. One of the things that it's built by is leverage too. And when everybody's P&L is in positive, everybody's P&L is in positive, needs to have a reversal. It needs to have a cool down, and it needs to do exactly what it did on the way up to reverse the market to be able to do it again. Otherwise, the market would just be a straight line all the way down the middle. It needs to reverse itself, guys. And that's why for every winner, there's a loser. So that's the Wall Street cheat sheet. We're going to look at the Cardano chart. You can see exactly the same thing happens, guys. Disbelief, you've got hope, you've got optimism. Let's use this as an example. You bought Cardano, say, here at 53 cents, and you're riding it all the way up here. You've got 10,000 in Cardano. Now you've got 20,000. Now you've got 30,000. You've got 40,000. How would you feel if you had 40,000 from 10,000 and you're riding it up and you wake up the next morning and it's 45,000? You wake up the next morning, it's 50,000. And you wake up the next morning, it's 60,000. Do you think you're going to wake up the next morning, it's going to be 70,000, the same as it was the day before and the day before and the day before? That's how it gets you, guys. That's the euphoria and that's the blow off top. So you've got your optimism, your belief, your thrill. At euphoria, you're going to be telling everybody. Your nan is going to be telling you. She's going to be text messaging you and saying, how do I get into this? Or I've just bought into this Dogecoin or whatever it is that they've bought. Then you get the lower high, the complacency. This is the pullback that we were talking about. Everybody thinks that you're going to go back, put in a new higher high, but it turns out it's a lower high. Anxiety, denial, anger. And this is where the retail sell, guys, because they think it's going to go to zero and they don't understand the markets fully. So that's the business cycle for you, holding for 3 to 4 years. If you were in this accumulation phase, here, for this long period of time and you were building, then you get the markup phase, which is phase 2 of the bull run. You've got the markup phase. Everybody that was in the build phase is going to be in profit. Anybody that's buying during the markup phase, they're going to get the peaks and the troughs where they're going to get the pullbacks, where the P&L is going to look negative. Then they're going to get the highs, the P&L look positive, negative, positive, negative, positive. And they're going to be buying the dips all the way up to the distribution phase, where everybody wants to get out the market. Everybody that was buying down here wants to get out the market down here. So if you were buying here, you're buying here 53 cents, and you held for 4 years, 53 cents, you held for 4 years. It's going to bring you over here, guys, pretty much exactly the same place that you were before, and you're going to miss all of this. The other thing about holding for 3 to 4 years, guys, during new crypto cycles, you're going to get new cryptocurrencies. And what happens when you get new cryptocurrencies? It's going to have better technology. It's going to have better use cases. It's going to have a bigger community. And the previous one from the previous cycle is not going to perform. It might go to zero. Even the team from the previous projects might go to the new projects. So basically, you need to be taking profits during the way, because these things will mainly go back to zero. I mean, Cardano is a brilliant project. There's lots going on. It stood the test of time, and it still comes back and drops from its high all the way to its bear market low, 92, nearly 93%. So imagine losing 92, nearly 93% of everything that you've got, guys, just by holding it and being a perma bull. So what we're going to do is we're going to go through the concept of being a perma bull, and we're going to use the mana chart next. So I've got the Decentraland chart up here. That's mana, and this is on the weekly chart, and this is going back from the previous cycle. I've got bar replay on trading view. So what I've marked out, guys, is our 4-year cycle. We're going to be a perma bull in this cycle for 4 years. We're not going to sell, because if we sell, we're a bear. If we're a bear, we're a black sheep. We're outside of that kind of community. We can't get involved with the bulls when we're a bear when you sell. So what happens if we're going to be a perma bull for 4 years? 208 bars, that is. This is the weekly. That's 4 years. Right, so let's go through. Let's go through, see what happens. Here we go. There's 1 week. There's 1 week. We could be buying at this point here. So if we were buying hypothetically at this point here, that would be early during the bull run. A lot of people don't buy early during the bull run. A lot of people don't buy during the build phase. And that's why, guys, within the Crypto Bullseye portfolio, I seen a window that I wanted to buy $50, $50, $50, and $50 during that build phase whilst they were at strong support. Whilst I was doing that, guys, nobody was interested. Nobody cared. That was the build phase, and my P&L was going down. And I was showing the portfolio as the P&L was going down and going down and going down. But the P&L had to go down during the build phase because I had built in a rule where I could only allocate my position down. So I wanted it to go down during the build phase so I could scale down my entry and take advantage during that build phase before the second phase, which was the market phase, capital regeneration. So that's why the build phase is important, guys. I've went through the build phase. Every single video that I did within the Bullseye portfolio, I've done it on YouTube, showed you the losses, and I showed you the gains. There's about 2.5K in there. Now it's just hit 5K. So that was the build phase, and that was even after this pullback. So it doesn't need to be lots, $50, $50, $50. And what I wanted to teach you was risk management, that don't have all your eggs in one basket. If you put all your eggs in one basket, then that's a recipe for disaster. If you put all your capital into one asset, then if that asset pulls down, you can't scale down. So I've gone through all these processes, and you can go and watch the Bullseye portfolio playlist. And that's got everything in there from the portfolio and the performance. And you can check the performance on Discord. So I've gone through the build phase in front of you guys. That was just a side portfolio that I'd done over a couple of month period. But we'll go through the mana chart now and be a perma bull. Let's be a perma bull. So look at this. This is good to be bullish. This is good to be bullish. So this is the best time to be bullish. Look, we're going up, we're going up, we're going up. Bull flag, and this is the weekly, guys. And then when you break up, when you're in a bull run, you break up with some volatility. So we're going, but it doesn't matter about all this because we're holding for 4 years. Big pullback, big pullback, big pullback. Go through the bull run, go through the course of the bull run. You can see, bam, look at that. Look at that. If you'd bought down here, that price increase on mana would have been 1,625% to the upside. If you'd put grand in there, 10 grand in there, it would have gone up 1,600%. But that doesn't matter, guys, because you don't want to be a black sheep, do you, and sell outside of the bulls. You don't want to not mix with the bulls and sell up here. You don't want to take advantage of all of those gains because you're a perma bull. Let's carry on. Carry on. Even higher. So that's good being a perma bull, but we don't know that it's going to keep going higher. We don't know. Then you carry on and you carry on. Until, guys, unfortunately, complacency, we think that we're going to get a pullback. We think we're going to put a new high in, all the way down, and then we're riding the bear market, guys. Doesn't matter, does it? Because we're not selling, we're not buying, we're a perma bull, keeping it forever. So you're holding and you're holding and you're holding and you're holding for your 4-year period. If they're saying hold it for 2 years, hold it for 3 years, and hold it for 4 years, does that mean that you should sell after 2 years? Does it mean you should sell after 3 years? Does it mean you should sell after 4 years? Are they telling you to sell? Does that mean that you'd be a bear and a black sheep? What are they telling you to do, guys? Carry on, carry on, carry on. This is the weekly chart. This is going through the accumulation phase for the next bull run. So if they're saying hold it for 4 years, at this point here, 4 years, are they telling you to sell during the accumulation phase of the next bull run? You've got accumulation, you've got markup, you've got distribution, smart money selling here. You're holding for 2 to 3 years down here during the accumulation phase, setting up for the next bull run. That's the point that you should be out of the market and then accumulating for the next bull run, taking advantage of all the gains from here, and then starting the new gains here during the build phase. So should you be selling during the build phase? Are they telling you to do that? Are they telling you to be a bear during the build phase? Guys, we've got a bull run. We've got a cycle. It plays 4 years. It's played 4 years every single time before. Doesn't mean that it's going to play 4 years this time. There could be something where it might play 4 years, 2 months. It might be 3 years, 8 months. But around about 4 years is the business cycle. And people will say super cycle, super cycle, super cycle, super cycle. For everything that goes up, guys, it must come down. The liquidity can't keep going into the market and into the market without it having a bear market. The market can't sustain it. And it's not just Bitcoin, it's not just altcoins, it's every single market. That's why you get your peaks, that's why you get your troughs. That's where you get your confidence in the market. That's where you get your fear. That's where you get your greed. And that's why human emotions are the things that drive the market. So I hope this video helped, guys. If you did find it useful, please do help me out and subscribe to the channel. I'm trying to get 7,000 subscribers by the end of the year. So hit the subscribe button, guys, if you found it useful, and I'll see you in the next one.